What's up, everybody? This is the beginning of a new video series where I'm going to briefly do three things: reflect on price action for the week, talk about some of my favorite trades from the week, and discuss what I'm expecting and looking for the following week. So, let's get started. I'm using the SPY chart this week since futures are rolling and exact prices get really tricky when that happens, and so do technicals. We ended last week in a much better spot for bulls, retesting the most important trendline in the past decade and bouncing. We knew that we wanted to buy dips on a long time frame as long as that held. We also had bonds hitting key support, adding confluence to that bounce play. However, following this, we were unable to decisively close a day over that key swing resistance at 407.78. This meant that bullish momentum did not really take control quite yet, and we knew we wanted to be cautious until we broke through there. Opening the week, we tried to break through and hold, but we failed. This is almost always a very bad sign from a technical standpoint. Subsequently, we broke down the following day, melting right through two very important supports at 403.22 and 401.51. Those then turned to resistance, and you can see we retested them and again broke further down. 399.73 was another key level and held initially, but we lost that too, turning that to resistance as well. Each time we break under a key support, you can expect it to turn into key resistance, and shorting a retest of a newly formed resistance like this one is one of my favorite plays. On Wednesday, I took a couple of those off this aforementioned level. We went on to close Wednesday basically flat, pinned to the 398 area of volume point of control. This isn't unusual as the VPOC often acts as a magnet for price. Thursday then saw a lot of volatility. We reached over that key 399.73 level, securing an hourly close over it, but we rejected 401.51 and it closed right back under. This is called a false breakout, when price closes over a key level and then right back under. It's an extremely bearish signal. You can see the resulting move as we melted right through 396.54 support and then right through basically every other support with little to no bounce. This dump was a bit more news than technical though, with some crazy stuff going on involving liquidity in some large bank names. We finally found a low near this 390.34 level I've been talking about all week. One thing I would note though is this 386.81 level and this teal trendline on the SPY chart. The former is a low volume node on the 1 year 1 day chart that lines up perfectly with this purple trendline on the weekly. The latter is the low end of our midterm trend. Friday was somehow even crazier. We bounced off 388.27 support, ran up to 393.18 and again rejected it, moving directly near this 384 level, which was my last support for quite a while. We bounced just short of it and chopped the rest of the day, unable to clear 388.27, which became new resistance after passing under it. Every time we pass under a support, it should become resistance. What's interesting is that we closed over the teal trendline with a daily candle, although under that support zone and under that purple trendline, though we did inch just over after hours, which puts us in a really tricky spot. Because on the futures chart, if we were using the futures chart, that would mean that we did close above the purple line. But I'm looking for SPY to close under 383.60, the lower teal trend line, to target the next leg down. The more confluence, the better. It's hard to find support after, but you could place one at 376.71 next. In the meantime though, the midterm trend is technically still up and you really want to respect bulls for just a little bit longer. Once we get a little bit further down, we can start looking at momentum shorts, but in the meantime, it's better to be safe than sorry, especially after a huge panic down move like we just saw. When everything is melting down like this, it's really tough to try to catch knives and pick bottoms, but if you really want to try, as I often do, I usually apply two different methods. I find very important swing support and use very small half a point long positions with stop losses just under, or I simply short the VIX using in the money puts. Being in the money makes you less susceptible to IV crush, and shorting the VIX usually offers really good probabilities and risk reward when it spikes a crazy amount relative to the market. It's basically a higher probability, more generalized way of picking a bottom. Also, the market doesn't have to go up for you to make money on it since volatility can decrease for lots of reasons. Just keep in mind it can go up quite fast and for just as many reasons. This isn't some risk-free money strategy like a lot of people think. So again, have a stop loss. Friday, I opened some in the morning around 25, but I stop lossed when we crossed back over the high of day for about minus 3% on the trade. Then I again tried and opened a larger position around 28. It's still not a max size position for me yet. I wanted to leave room just in case we go to 32.50, and I took a bit of profits into close in case that happens, since it tapered off quite a bit and I got about plus 10%. But I did leave enough on to make a decent bag if VIX did find a high on Friday, which it very well could have. Oftentimes when we get a huge candle upwards like that, it either means we're headed for a massive crash of some kind, or VIX overreacted and it's time for it to revert to the mean. Next, let's talk about the bull case a little bit. If this teal trend line holds and we start bouncing, you want to look for a candle close over this 393.18 level to start an honest reversal higher. It breaks us into this volume node that runs up to 401.51. Following that, you want to play it by ear a little bit with a bullish bias, looking for each resistance to become support if we pass over it. There's lots of them, so I'm not going to list them one by one. You can see them on this chart though. For a bullish momentum to really take hold on a longer time frame, we want to look for a daily close over 407.78, which opens a lot more upside. Lastly, let's look at a wider perspective and summarize of it. It helps to keep things as simple as possible. On SPY, we're in a ton of danger, but we closed just over a very important trend line, so technically the midterm trend is still up here and we want to respect bulls and maybe even try to buy the dip just one more time. It's at 383.60, and if we lose it, there's really nothing until 376.71 or so. The most important trend line is that purple run that runs from all-time highs. We got a weekly close under it, but we closed after hours just over it. So to be safe, you want to look for a monthly candle close under to confirm a false breakout and a close back into that huge trend, which would be a very violent setup that likely triggers new lows. Keep in mind, these are not predictions. I'm simply analyzing how probabilities are distributed to make good risk-reward trades. No one can predict what's going to happen, though many claim they can. Thanks for watching, and if you have any questions or suggestions, please comment and subscribe so you don't miss any updates.